In today's challenging mining and construction sectors, strategic partnerships pave the way for growth and greater opportunities. Babcock's Craig Sende and Benny Foster from Volvo Financial Services South Africa share insights on fleet equipment financing. Stay tuned to learn how you can secure partners with global expertise tailored to your unique needs. Craig and Benny, good morning. Thanks for making time to talk to us about VFS this morning. Craig, I'll start with you. Can you please give us a little bit of information around what your role entails at Babcock?
Good morning. Yes, thank you very much. Well, basically, I'm the sales manager for our northern region of our equipment unit at Babcock. And we're responsible basically for about 75% of the equipment business unit's revenue on machine sales.
Thanks so much. Benny, I'll come to you. Can you please also just a short intro and what your role includes?
Yeah, good morning. My name is Benny, and I'm the key accounts manager for Volvo Financial Services, and I'm only focusing on the Babcock book. So I'm responsible for the whole of the country, but on Volvo Finance only.
Thanks so much. Okay, so I'll come to you still, Benny, just while we're here, and really get a bit of a sense around what this, what the VFS offering has changed in the marketplace since it came into play in South Africa. Because in this space, of course, fleet equipment owners are familiar with financing within their industry. How does this offering, the VFS or Volvo Financial Services South Africa, differ from what's in the marketplace or what was in the marketplace before it came in?
Yeah, so I said we focus on a specific industry. So my role is only focused on Babcock itself, which sort of creates a specialist in the field, not only in asset-based finance, but specific to the Euro equipment that Babcock sells. We tend to know the norms and the guidelines in the margins, and we only focus. We don't finance a vehicle one day and a truck the next day. We specifically focus on this specific area, and we know what margins to look at. Also, together with Babcock, we've created the infrastructure on selling these assets, but also if something goes bad, of remarketing the assets as well. And then the big thing is that obviously the infrastructure is here, the know-how is here, and also it's like almost a one-stop shop. When a client comes to us buying a Volvo equipment, we can offer them the finance, we can offer them insurance, and that makes it a little bit different. Also, and just to conclude on that, we asset specific because the asset is our security. We strongly look at the value of the security in the asset, which makes it different from other banks or financial institutions.
So what I'm getting is the biggest differentiator is your specialization and the fact that you're based within Babcock, which makes it unique in that sense, and also different from how financial services institutions or banks specifically finance these vehicles. And on that note, Craig, I'll come to you now on this around similar lines, because you are on the sales side and you would have seen, the industry before and after VFS came into play. What have you seen as some of the changes and how your customers and clients are experiencing or at least interacting with fleet equipment financing?
So yes, I think what Benny mentioned earlier about it being focused on the asset itself really rings through, because what we've noticed is there's other financial institutions as well that do finance equipment. However, Volvo do look specifically at the asset that's up on the table. What they do is they work with the customer as well to try and find a facility to move on, from the next step that's due, perhaps on the contract or whatever. And certainly what we've seen from our side is that certain commodities other financial institutions are sort of walking away from. And those commodities mean they have a huge impact on our business. And Volvo Finance at this point is still looking at financing those commodities.
That's a great point. And Benny, I'll come back to you once again with just the uniqueness of this offering, because one of the things that make it really different from what's out there in the marketplace is that every customer is assessed according to their project requirements and challenges, which of course means every individual business is seen as unique. Have you seen any changes in terms of business growth and the clients that you are dealing with because of the uniqueness of the offering?
Yes. Again, because we client focus and also we focus on the client's business, we tend to learn the business or get to know the client's business quite quickly. And to the type of industry we in, it's also based on specific projects. So we sort of look at those specific projects and we get into the, for lack of a better, get into the bed of the client with that projects. Let's say it requires a certain amount of assets and this is the project that we will use it. We will look at the project, we will look at the client, and we've seen in cases sometimes within a year or within 18 months, some clients book or the turnover actually doubled. And in one case, I've seen a client that his business or his turnover basically not only doubled, but fourfolded in a specific year, not only in his book, but also in his fleet. And yeah, that to me is a success story. So that we know each other and we know what each other's needs are.
And I think that to me speaks to this idea of partnerships, which we haven't really spoken about, because then you become a partner in that business and you are invested in their growth because you deal with them directly. And Craig, because you deal with them on the sales side, I think you would have seen a lot of the growth that comes in with some of these businesses. Can you talk to some of the stories, or at least some of the growth that you've seen as a result of this offering?
So yes, like Benny was saying, it's a relationship between ourselves, Volvo Finance, and the customer. And I think what's really important is that you've got three different perspectives looking at the whole financial model with everyone's interests in mind. And, obviously the biggest being the customer's growth, because through growth of a successful relationship, you get great business relationships going further. We've noticed, as with what we've alluded to earlier with Volvo Finance and looking at particular assets, there was a customer I can refer to a couple of years ago. He qualified on his financials. He started a new contract, and he got finance approved for one articulated hauler. Now, you can't really do much with one articulated hauler, so we asked, okay, can we perhaps look at financing the excavator that would be loading this? And then the customer would rent in the articulated haulers. And Volvo Finance approved that. It was double the price of what the ADT is, but they looked at the asset at hand and decided to take the leap on that. And it's worked ever since. Customers have grown, like Benny says, some have grown fourfold. And isn't that what we're looking at long term in any case with any customer?
This is true, and I think it rings true in very many spaces, because it also contributes to economic growth, and not because the growth of one business contributes to the whole. I think economic growth in general as a country, as a nation as well, which I think is where the bigger benefit is. The fact that still with you as well, Craig, on this one, the fact that VFS deals directly with the Babcock sales team means that the solutions are made fit for purpose and they are fit for this market. Even though you still have, international and global trends that you look at and that you benefit from. How does this influence fleet equipment financing in your experience? Yes, there's the growth that you've spoken to. Yes, there's the individualization that you've kind of spoken to. Are there any other areas where you see this kind of partnership influencing our fleet equipment growth for your clients?
So I think one of the most important aspects that Volvo Finance look at, and yes, they do check financials, which, I mean, they have to, to see affordability, etc. However, unlike your conventional banks, they don't look at what you currently have. Benny could perhaps elaborate a bit more, but they do look at obviously affordability and then the contract specific. And from there, they design something with our sales team, because all of us, we take a portion of the risk, in the whole thing. Benny's involved with the sales guys probably from an early stage. And I think that makes the world of difference, because once you're involved from day one, you've got the whole picture. Everyone can put their minds together and you can have a look at what best possible solution we can get. And you can only get that if you've been there and you've had a trusted service that you've delivered.
Benny, can you elaborate a bit more on this point around what influence this has, or what influence this has had in the growth of the businesses, and also what the partnership really contributes to the end customer?
Yes, definitely. First of all, two things. Our source, and I'm talking about us as Volvo Financial Services, our source of business, or our client is number one, Babcock sales, number two, the client. With that partnership, we create a relationship between ourselves, the client, and then obviously sales. When we look at finance, or when we look at the client's portfolio, we don't look at it in isolated basis. We look at historic, present, and future. We look, what has the client been doing for the past year? Who is driving the business? In other words, who's the jockey in the business? What type of contracts has the client been securing in the past? And what does he want to do now? Obviously, he wants to buy assets. What will he be doing with these assets? And obviously, the risk matrix is a combination of this: who the client is, what the financial history looks like, what the future looks like, what the cash flow looks like. And then obviously understanding which projects are the client busy securing. So you need to know probably at least a year in advance, the client is tendering for this type of contracts. This is what you will need in 6 months. And together with that, obviously, you need to combine it and sort of align it with stock availability. I mean, a client doesn't decide he wants to buy an excavator today and he gets it tomorrow and starts working. I mean, this is a planning. And if you're not involved in this whole planning process, one of the three parties are definitely going to lose it. So I would say that is the beauty. And because we are focused, we can align all these factors that I've just mentioned.
This means then that getting in there or starting the relationship earlier with you is better than starting it later. And this sense that should you have had a customer for, say, 5 or so years, and year on year they keep applying for tenders, you then know you've got that historic data on them, and you're able to give them some guidance in terms of how to grow their fleet equipment. Am I getting that correctly?
Yeah, we are not reinventing the wheel. Our client retention is extremely important. So we know the client, we know who and what he is. All that we do now, we get updated information and we get what type of contract, and we determine the client's needs. And sometimes even, or a lot of the times, we've got facilities that is valid for 1 year. In other words, after that facility has been granted to the client, he's got 1 year to use it up. So then it is basically as easy of getting an invoice and signing a contract with the client. It's like a 24 or 48 hours exercise if the facility is in place.
Okay. No, that makes sense. Well, sticking with you, Benny, and then I'll come to you, Craig, with the same question. Some industries are more complex than others, and so are their fleet equipment financing requirements as well. So, for instance, in mining, they have a combination of construction equipment, loaders, and ADTs while also running a fleet. What goes into managing those kinds of complex relationships?
This will be a short answer because I think I've dealt with that already. The rule number one is know the market, know the industry, know your client. You will know if you're now involved in construction and not mining anymore. If you don't know that, then everything I've just said is not valid. That relationship is extremely important.
Sure. Craig, I'll come to you with the same question, but slightly differently. And I think the caveat I'd like to add there is again, not just the relationship and the historic relationship and how that historic data of having dealt with other similar clients influences how you manage these relationships?
Yeah, I think we touched on it earlier as well, where it's basically a three-way partnership. When you've got three people or three parties working on something, you're kind of covering all angles, and you're gaining a bit of experience of what the job entails. Perhaps one thing we could mention is we've got some customers, for example, that have got Volvo Finance approved on other Volvo products, for example, Volvo road trucks. But they do run some of our wheel loaders to load the road trucks, etc. What happens then is we just do what I think, Benny, we call it an asset swap. So where the facility is approved for X amount on the truck side, they can take the portion of funds that's needed and just swing it across to one of the Volvo wheel loaders, for example. I think the other thing is the speed has improved on where we were probably about a year ago with getting approvals and everything from credit. Volvo Finance has worked very, very much on that. And it just gives your customer a better, what's the word I'm looking for? He's more confident to use the product if he gets a quicker response. Other deals do take longer because they're probably maybe a bit more complex. But nevertheless, there's constant feedback to ourselves and the customers. And I think that's how it goes forward.
I'll come to you, Benny, along the same lines as what Craig was just saying. And I'm thinking now of the fact that this came into the market in 2017. In 2019, the pandemic happened and a couple of things changed as a result of the pandemic. And we're now post-pandemic. How have things changed pre and post pandemic in terms of how the industry has grown, in terms of your understanding of the industry and engagements with the industry? And I'm basing this off of the back of the fact that you, of course, get international trends and you have international, partnerships as well that you make fit for purpose for this market. What has the change been in your experience?
Yeah, obviously, to talk about the pandemic, that's an anomaly that nobody obviously can use that as a norm. But it definitely, we have obviously in that time assisted our clients on our book. And obviously we had to help them getting through difficult times, which they are through now. But to answer your question, from 2017 up to now, when Volvo Financial Service started, our book has grown tremendously. And on the Volvo Babcock side, obviously, we look at what we call penetration, which purely means of how many of the units that Babcock sells comes to Volvo Finance. So we have, I know last year there was a staff shortage, but we had, in the beginning of last year, we had a 5% penetration. We've now managed to push it up again to about 50%, 52% more or less at the last month's figures, which shows you that we are getting a big portion of the book, but obviously we endeavor obviously to finance as much as possible of what Babcock is saying. Normal criteria for an in-house finance company, you need to be more or less at 50% when you're successful, but nobody says you can't go to 50%. So that's the big change if you have to quantify it. So,
Craig, I'll come to you now with again this kind of change pre and post pandemic, but not necessarily what it meant, but more the peace of mind that comes with somebody inside Babcock understanding and knowing your business, because I think that's the part that very many business owners have a challenge with, right? Because the industry changes, and as the industry changes, it's always great to have a partner who understands your business. How has that, in your experience and in your work with, when you work with Babcock and VFS, changed and made your partners, the businesses you work with, more confident in dealing with you or increasing their confidence in their own businesses?
So I think there's a lot of commonalities. So when you've got someone basically with your team that's having a look at, getting involved with customers, for example, Benny would go out personally to the customer. It's not handed over the phone through a call center. It's a very personal relationship, and people like dealing with people. So if you've got that personal aspect together with what we do, cross-pollinating, I think it's a winning recipe.
You've spoken about how the partnership works, the three-way partnership works between, VFS, Babcock, and the customer, and how the customer experiences it, which is a really great one. Can you talk us through one or two maybe growth stories that you've come to experience? You've mentioned the one in the beginning about some clients that have grown threefold, fourfold since they started dealing with you, and you've also mentioned this idea that sometimes you could have an asset swap between one asset to another if there's a need for one asset versus another. Do any stories of clients who've grown over the years come to mind? Maybe I'll start with you, Craig, on that.
So, sure, like I explained earlier, I gave the one example with a customer with the excavator and the articulated hauler. We've also had other customers who got their first break on a mine, and Volvo Finance, together with us, we decided, okay, we're going to go in with this. And he's since bought 3 or 4 teams from us. It's not only the smaller guys that grow into major role players in the industry. It's also our bigger customers. Some are even listed. And they like the finance because it kind of puts them, it's a separate facility where they don't have, you must imagine if they're building roads, etc., and there's huge money tied up in, until they've completed the project. And having this facility doesn't tie their cash up with other banks. So having the facility available allows them to get the equipment that they require in order to complete the job successfully.
Do any client stories come to mind for you, Benny?
When I quote the client, I have dealt with Volvo Financial Services for several years now when purchasing mining equipment for my business. I find them reliable, always professional, and very knowledgeable about the service they provide. Our relationship has evolved into more of a partnership as they support our business with different financing solutions to suit our needs. I would recommend Volvo Financial Services to anyone. That's one example.
Yeah, so it's this. I think it's this. I keep using the word partnership quite a lot because that for me kind of stands out in how you deal with the businesses, as though you are invested in the growth of the business, and the clients actually see that part. And then I think I'll come to you for the last one. Craig, for people who are, first of all, for fleet equipment owners who are on the fence or at least looking around, first of all, why should they go? Why should they go with this solution? And lastly, if they've decided to go with the VFS offering solution, how do they go about it? Where do they start?
So again, I will reiterate, it's asset-focused finance. You've got someone dedicated to the asset that you're looking at purchasing, no matter how big or small the asset. And contact details, probably the best would be to go onto ours, Babcock, or Volvo Finance's website.
Thank you so much. Have a great week. It was really great, very insightful, and I think the things that stand out there for anybody who's listening should be this idea of partnership, asset-based financing, and of course, knowing your clients, knowing the person you're dealing with, and the fact that you get invested in getting to understand them and their business. Thank you very much for making the time.